Welcome back to this special edition of Invest Africa, coming to you from the World Economic Forum on Africa, which is currently in session in Cape Town. Still with me is Anthony Thunstrom. He is the Chief Operating Officer, KPMG Global Africa Practice. We still have Innocent Dutiro. He is the partner, Bain Company. And we're joined now by Paul Lamatang. He is the head of Africa and Middle East Global Banks, Canadian Imperial Bank of Commerce. Paul, thanks very much for joining us at this point. So let's talk about the ease of doing business in Africa, because this is obviously a theme that we're going to investigate again thoroughly over the next 2 days here at the World Economic Forum.
It's a good news and a bad news story.
Let's start with the good news.
It's a good news story because when you look at the World Bank's Ease of Doing Business Index, you're seeing African countries do better. One great example is Rwanda. And Rwanda is a real miracle. And from a business standpoint, it's a place that rates #1 of all the African countries in the ease of setting up a business. So you can set up a business in Rwanda in a day, and that's very appealing to a business person, in particular to a foreign investor.
It's the third most competitive economy in terms of African countries, according to the World Economic Forum Competitiveness Report. That's Rwanda.
It's an exciting story. The bad news is there's only 6 of the 54 African countries that are in the top third of the Ease of Doing Business Index. And that's clearly not enough for us to be appealing to international investors. It's clearly not enough for us to do more business either within our own countries or across borders. So it's an area that clearly governments need to improve, and the private sector needs to push and be militant so that these reforms are done so that it's easier to do business in our own countries and easier to do business across borders.
So having said that, can we force other countries to play catch up to what Rwanda is doing on the continent?
Yes, we can. I think recently we've done some work in terms of looking at the supply chains globally and in Africa in particular. And there's a lot of focus on tariffs. So let's lower the tariffs that will increase global trade, etc. But when we looked at the blockages within the supply chains, which includes regulation, ease of doing business, etc., there is probably about 1 to 2% of GDP growth that is locked up within those inefficiencies. And yes, by demonstrating the importance of unblocking the supply chains and the benefit coming thereof, you can actually persuade countries to ease the way of doing business.
How do we fast-track governance and create a more enabling environment?
I think it's based on what Innocent had to say. I think it really is around setting good examples. Paul mentioned Rwanda. I can just share an anecdotal example. We hosted a Rwanda investment conference at KPMG a couple of weeks ago. We typically end up with 100-odd delegates, regardless of the size of the country. We had 280 investors who were interested in investing specifically in Rwanda, not because Rwanda necessarily is the biggest country. It's got a population of about 10 million people, but because of those government reforms. So I think it makes a big impact. People are sitting up and saying those are countries you want to invest in. Other governments are sitting up and saying we need to reform in certain sectors. We've been called in to help reform the insurance sector in a number of countries recently, and it's almost, I guess, it's a domino effect. One country does it, they see the benefits, other countries want to follow suit.
Talking about Rwanda, are we seeing it spill over into East Africa as a better investment opportunity than potentially West Africa, just because of the follow the example?
East Africa is an interesting market because it is quite ahead of other regions in integration. So they're talking with each other, they realize that particularly Rwanda, which is a landlocked country, it has an economic interest in making sure that there's basic infrastructure to the ports to get goods. And
they've capitalized on the port of Mombasa in Kenya.
Exactly. So there's a sense of dependency. You hear in the East Africa region discussions around a potential common currency as well. And of course they're looking at West Africa, largely French West Africa, where there's quite a high level of integration and where there is a CFA, a common currency. So it's exciting to see. A lot of it, though, is around leadership. So I think you need to look at East African leaders, and it's interesting, there's a lot of leadership, and they're always present at the World Economic Forum. So I think it's really a question, do the politicians sit down together, do they use the institutions that are available to them in their regions, do they tap into the African Union, NEPAD, the NEPAD Business Foundation, do they work with the World Bank, the IFC, the African Development Bank? There's a number of mechanisms for them. But for international investors to get excited, They want to see strong leadership, and they want to see good progress around things like ease of doing business, and they want to see basic infrastructure. And when all those preconditions are there, then you're going to see a lot of capital come into Africa. It's already coming. I think a lot more will come under those conditions.
How critical are private-public partnerships to Africa's success?
Critical in the sense that a lot of the skills reside in private sector. If you look at the plans that the South African government, for instance, has in the National Development Plan, the biggest bottleneck is getting the skills to actually implement the ambitious projects that the government has. So therefore, by going through for a public-private partnership, you get a transfer of skills from the private sector into the public sector. You also have private capital going into those infrastructure projects. Because if you look at base infrastructure, it is actually expecting too much to expect private sector to actually build base infrastructure. It needs public sector leadership.
You want to add to that?
Yeah, I just want to maybe a slightly different view. I think it's critically important, but I think again the good news, bad news, and you've got to balance these things. The good news is exactly what Innocent sketched out for us. I think the bad news is that public-private partnerships require some very, very specific skills. Though that skill set is in rare supply, even in the biggest economies in Africa, including South Africa. We're involved in advising on a number of these projects, and we literally have to search the entire continent and often beyond the continent to find people who've actually got the experience, who've been there and done that, and who can really qualify at the right level to meaningfully participate in these.
Let's talk about now how wide the gap is, Paul, between Africa's potential and Africa's perceived potential.
Well, the good news is I think that there is a high level of perceived potential. And that's why so many people show up at the World Economic Forum, and that's why so many people work with the KPMGs and Bains and other of these institutions to advise them and help them along the way. In the case of Africa specifically, and coming back to YPO, the Doing Business Globally platform, which is our platform to help each other, is all about getting access to a high level of good information, often that we get through alliance partners, sharing of best practices of how did you asked earlier, tell me a success story. And we always like to move when we hear one or two success stories. Business-to-business opportunities. It's much easier within the confines of a network that shares a common ethos to help each other to achieve these business objectives. And that may include simply a friendly phone call to answer to a question, or it may actually be a trade mission. So I think there's a very high level of potential and perceived potential, but it's important that we see the results and we see them more quickly than not. Because if there are too many, it takes too long to bring projects forward, that can be quite disconcerting, and private sector tends to get impatient in that case.
Aren't frontier markets all about long-term investments rather than making a quick buck?
I think you're absolutely right. To be successful in a frontier market, you need to have a very long-term investment outlook. So to come in and say, I'm going to make my payback's going to be 12 months, is not realistic, particularly when you're looking at large capital investments like mining and oil and gas. But there's a great opportunity in the near term to make money around the growth of the population. You know, we're 1 billion people in Africa today, moving in the next 30 years to 2 billion. We talked earlier about FMCG and financial services. There's a lot of great opportunities, and this is what the entrepreneurs are doing. Back to an earlier discussion, we've got a lot of innovation around our young people all across Africa, and they're the ones that are certainly picking up on these opportunities that big business isn't.
Innocent, do you think that Africa is going to get its fair share of capital going forward?
There is always competition for capital. I think the capital owners are looking for the best returns for their capital. And at this point in time, Africa actually offers some of the highest returns if you look at the average returns coming out of the world. And therefore, on that basis, we need to take advantage of the opportunity and create an environment where the investors would come and invest their capital.
Coming back to the theme here at the World Economic Forum, delivering on Africa's promise, surely we're going to be judged very shortly. A lot of the investments that have been made to date, people are going to turn around and say, are we seeing those investments, the rewards coming to fruition? So the time is really now to prove that we can do it.
Yeah, Bronwyn, I agree totally. I think we are already, though, seeing some of those returns. The kind of GDP growth rates that we're seeing, where they're sitting at 6, 7, 8, 9, 10%, that's not by accident. Those are really on the back of, I guess, plans and deals that were struck several years ago that are already online and on stream. For me, it's around really maintaining that momentum and keeping it going for the next 5 to 10 years. It then becomes self-fulfilling, I think, quite quickly.
But Africa is not immune to the woes that the rest of the world is facing. Innocent, your view in terms of globally what we're seeing materializing and this patchy data from an economic perspective in both the US and Europe, and we will be affected one way or the other?
Yes, definitely we will be affected, and it's a topic which we are keeping a close watch on, because Europe has traditionally been the largest market for a lot of African countries. The good fortune or the good news story has been that India and China have been growing at a reasonable level, whilst Europe has been in the doldrums. So India and China have kind of stepped into the breach that Europe has left, but we're not immune to those markets in terms of growth. The way we can, or the way we are kind of protecting ourselves from that, is the growth of our own market, our own consumers. Rather than being export-led economies, we need to look at developing domestic consumption.
Paul, perhaps we get you to input here, given the fact that you are chair of doing business globally. What is the temperature out there like at the moment?
Well, I think we need to be good ambassadors. Those of us that are YPO members here in Africa, as we go and do business in other countries, we speak to other YPOers, and we're missionaries, if you will, to talk about the story. Africa is rising, and I think the stock of the
But is it rising because the rest of the world is looking so dismal?
No, I think you've got 10 years of strong economic growth in Africa. You've had relatively good political stability. You've got big nations that are interested. We talked earlier around Africa being the future breadbasket. We talked about all the infrastructure projects that are either planned or need to be planned in the coming years. I think that there's fantastic potential. I moved here for a year 10 years ago, and I'm still here because I haven't found a more exciting place to do business.
And Anthony, just very quickly, a final comment from yourself in terms of the Doing Business in Africa network. Where do you see this network in 5 years' time?
Bronwyn, it's already, I think, the fastest growing network in the YPO world. We're heading towards 1,000 members out of the 19,000 global YPO members. I think it's going to go from strength to strength, really, because number one, the interest in Africa, and secondly, I think a lot of value is coming out of this group already. These are like-minded individuals. They've all got serious constraints on their time. A lot of them, for our meeting this morning, flew in from all over the world. The only reason they do that is they actually want results.